Hello and welcome back. You're watching Market Wrap, an initiative by ICICIdirect, and I have with me Mr. Pankaj Pandey, Research Head at ICICISecurities. Good afternoon, Pankaj, and welcome back.
Good afternoon, Geet.
Tough week for the markets. If we talk about Sensex and Nifty, we saw Monday closing in green, but rest of the 4 days, some kind of a profit booking from higher levels. Record high for Nifty on Tuesday. And since then, it's slowly drifting downwards. Same is the case with Sensex. It closed the week below 51,000 mark and Nifty below 15,000 mark. What are you doing at these levels, sir? Are you initiating buy on dip strategy, or you would wait for a deeper correction?
So I think given the rally, what we had seen post-budget, some kind of a cool-off in the market was expected. And I think even the world markets look a bit tired. So what we are witnessing as of now is a more of a healthy correction. For markets are down about 500 points from the top. We would expect another 200 to 300 point kind of a correction more. So somewhere about 14,600 levels is what we would expect. See, since last June, July, we haven't seen markets correcting or extending their correction for more than a week. So we are definitely not expecting a very extended correction and a deep correction. I think globally, the sentiments are still quite good. I think yesterday's comment from Treasury Secretary, wherein they mentioned that so the price of, in terms of stimulus, the price of doing little is far more than sort of doing more. So that way, I think the global sentiments are still fine or good. Since we don't expect markets to sort of keep rallying in one particular direction, some bit of a correction, and it's a very healthy correction what we are seeing is expected. And we are seeing decent amount of sector rotation also. So I think earlier you had the defensive pack and the banking doing extremely well, especially private banks. This week, some of the PSU pockets and PSU banks did extremely well. So I think it's a very healthy correction. Structurally, we would want to maintain for this year is that IT pharma looks far more better. Besides that, mid caps and small caps is what one has to look at. So that still stays. So probably, like I said, you could see correction of another 300 to 400 points more. But then again, I think market is in a fine shape. So that way, I think we would watch out for a range of 14,600 to 15,300 for the next week.
What would that mean for the mid cap and small cap space? Because that has been outperforming till now. If we talk about the major indices and the mid caps, is it the right time to accumulate quality mid caps and small caps on the dips that we have seen in the market? Because last 4 sessions have been very good for the mid cap and small cap space, and today the entire gains that they made during the week were lost in one session. It's being too risky at these levels.
So generally, people should avoid mid caps and small caps when the economy is sort of overheated or not expected to do well. And same as the reverse. So when the economy is expected to do well, typically mid caps and small cap do a lot more better, offer far more higher returns. So that way, the construct for mid caps and small cap still stays strong. This week we have seen that they have actually outperformed the Nifty in terms of so they are still up about 0.5% compared to Nifty down about 1.5%. That way they are still far better off. I think what we have seen from a result season is that we have a number of companies where we are expecting pretty strong set of numbers even in subsequent quarters. And I think these are the names which some of the names which we have been sort of recommending. So the likes of, say, for example, KNR Construction, typically the ordering and tendering in Q4 picks up. Budget was very positive for the entire infra pack, especially roads. So KNR is one of the best plays. Then in auto, we are seeing a CV recovery happening. And Apollo Tyres is a big player in that. So, and company is constructively looking at improvement in ROCs. So which is where something like that with a target price of 300 is what we like. JK Cement, again, they have expanded or they've come up with a capacity at the right time. So they witnessed one of the highest volume growth in the last quarter. And our sense is that their volume growth will remain at elevated levels. And with the kind of infra push what the government is giving, I think this stock should continue to do well. There we have a target price of 2,950. Similarly, KPR Mills and SKF India. SKF is a bearing company. Typically, bearings are used across segments, whether it is a PV or whether a two-wheeler. You have a lot more industrial usages for bearings. So I think all these companies are a good play on the overall economic recovery and typically mid cap and small cap basket.
Yield moving higher, is it a concern? I mean, if yields are moving higher, a borrowing program is yet to start for the next financial year. Uh, is it a cause of concern for the markets? Are they concerned actually?
So for bond traders, yes, because see the typical expectation for them is for the yields to sort of go up. But I think what we also need to look at is that the inflation is also sort of cooling off, and especially the kind of inflation what we saw on the vegetables and other agri commodities has started to cool off. So one part of that concern is addressed, but yes, because the government has announced a large expansion in fiscal deficit, so anxiety levels are definitely far more higher, and which is where the volatility in yield could remain. So from 5.9 to 6.5% is the kind of a range one can look at. I think in US also the yields have moved up. So I think so that way. Uh, it's a bit of a sort of a more of anxiety rather than sort of a breaking point for the market. So I think equity markets are not that sort of really worried. Bond markets, yes, there's a lot of anxiety, which is getting reflected in the yields.
Mhm. You just spoke about inflation, but now with the crude surging beyond the $63 level, and then petrol and diesel prices in India are, near record highs. So inflation, maybe it picks up in coming months if crude remains at these levels, and there is no excise duty cut and all coming from the states, and VAT cut from the states, and excise cuts from the center. If that doesn't come and crude remains at these levels, what is your view on this, and how is it going to impact the OMCs and the other oil refining companies?
So one is see crude is bound to witness spikes whenever you see disruptions, whether it is a supply disruptions or like the one what we are seeing in US. So that way, crude does this kind of a sporadic movement, but structurally we are not bullish on crude doing very well. So from that perspective, yes, from a shorter term perspective, it's a bit of a concern given the fact that we haven't seen government reducing excise duties and all that, and which is why the petrol and diesel prices are at higher levels. But I think overall, it's still not a challenge from an inflation perspective because structurally we would still not look at crude doing that higher. In terms of oil marketing companies, so upstream companies definitely have seen the bounce. So if you look at ONGC has been one of the best performers this week, largely tracking the crude oil prices because see for them the volume growth is hardly there. So it is largely pricing growth what gets captured more. For downstream companies, I think so there is a decent amount of excitement in terms of what kind of evaluation BPCL could get from potential bidders. But number-wise, we haven't seen that kind of a big improvement. So last quarter was a sort of a muted quarter in terms of GRMs. If you look at marketing margins are good, but the GRMs are still soft. GRMs could improve going forward, but not meaningful enough to sort of chase these stocks. I think gas as a pack looks far more attractive given the fact that the PM also highlighted that they would want the gas overall mix to sort of improve from 6% to 13%. And gas is a relatively cleaner fuel. And with GST, if they are able to bring that into GST, the usage of gas is going to sort of increase more. So key beneficiary there again would be Gujarat Gas, GSPL, which is a holding company of Gujarat Gas. Then Adani Total Gas is another big beneficiary because the way they have been sort of expanding their footprint across pan India, they look like they are expected to sort of gain the maximum from this. And beside that, you have IGL and MGL also benefiting. So gas pack looks a lot more better structurally in terms of volume growth, in terms of better margins compared to the upstream or the downstream company.
You just talked about Adani. I mean, pick up any of the Adani Group companies share. I mean, it's buzzing. Adani Greens, Adani Ports. You have Adani Enterprises doing well. So, what is your view on all the entire gamut of stocks from the Adani Group?
So we cover only Adani Gas or Adani Total Gas. Adani Port is something which we are constructively looking at, because if you look at the kind of capacity expansion what they're chasing, I think they would be the biggest beneficiary of this entire manufacturing push what the government is giving. And it's a sort of a big play from that perspective. Will take a decent amount of time to sort of play out. Then I think Adani Port also will benefit from the dedicated freight corridor, Western Freight Corridor, which we are expecting to sort of get launched in the next few months. So besides Concor and Gujarat Pipavav Port, they would be the beneficiary. So I think logistics as a space also looks quite interesting. These are the two companies. Otherwise, there are other companies which have been doing well, but we have not been sort of tracking the entire group. But I think they are sort of positioning well from an annuity business kind of a view. Because all these are businesses where you sort of get annuity for a long period of time, and with interest rates being lower, see, the value of business keeps getting better because your discounting or the cap rate keeps coming down, and that sort of enhances the value.
Mhm. If we talk about the Nifty gainers this week, I mean, ONGC is topping the list by 12.5% gains. GAIL, NTPC, Power Grid, and then Nifty 500 come back, and it's Central Bank, IOB, Bank of Maharashtra, Bank of India, all PSUs. So time to really shortlist a few PSUs and get into them, because this investment drive is in full swing.
So we've seen that PSU banks sort of doing extremely well. The likes of Bank of India, Indian Overseas Bank, and other Central Bank of India sort of doing well, largely from the excitement that some of these banks will get sold. But so structurally, I'm still not very comfortable recommending these stocks to investors from a portfolio perspective, largely because, see, most of these banks are sitting on high NPAs, and even if they get sold, you need to do aggressive amount of liquidity infusion, and which is where the dilution can be a sort of a risk. Compared to that, you look at something like IDFC Bank. So they are raising money for growth purpose. So it's a far more better quality of fundraising what one has to look at, rather than sort of. So if you are raising funds to sort of survive or to make up for your losses, that's not a very great sign. And to turn around some of these PSU banks for potential bidders also could be a challenge. So I think a lot of steps needs to be sort of taken before we sort of say that some of these stocks could be portfolio bets. I think SBI is clearly a far more better player because their gross NPAs is 5 to 6 odd percent. So from whatever metrics you look at, they've been sort of doing a lot more better. And structurally, book-wise, also they've been a lot more better. So for them, the home loan book, which is a relatively secure book, is far more than the rest of the pack. So excitement is there. So this week they have rallied, and I think today we have seen decent amount of cracks also in these stocks. So I think people need to have that knack of trading in these stocks in terms of timely entry and exit. And if you can sort of do that, be there. Otherwise, I think it is better to sort of watch these stocks from sidelines.
Yeah, 40 to 59% gains in 1 week time. I mean, what would you suggest if somebody has picked up the stock on Monday? Would you suggest moving out and booking profits?
So I think some of the tier ones, besides, say, for example, SBI, something like Bank of India can still be looked at because it's a decently sized bank. Our sense is that the bidding, so some rather than sort of picking up a regional bank, say, for example, Bank of Maharashtra or other banks, I think Bank of India is a more pan-India bank. So I think that looks a relatively better bet compared to the rest of the PSU banks.
Some kind of profit booking we saw in auto space this week. Aisha losing around 7% and Maruti was a little down. So what should one do? I mean, is it a strategy to buy on dips for auto space?
Actually, if you look at this week, metal again has done well because the pricing for metal has been firm. And for auto, see, we haven't seen this kind of a pricing or a margin pressure for auto companies in the last quarter. But if the prices remain at elevated levels, you will see concerns on the margin side. Otherwise, auto volumes last quarter was good. So volume can still remain be good, can remain good, but the only thing is that if the prices of some of these raw material remain at elevated levels, then you'll have margin concerns creeping in, or otherwise they'll have to take price hikes, and then again you will start thinking that whether that will impact demand. So which is where softness in auto was seen. And but our sense is that I think these are sort of momentary things, but auto again, you need to sort of look at the companies in terms of say for example CV cycle looks good, and which is why Tata Motors or Ashok Leyland and the ancillary players like Apollo Tires look attractive. I think Wapco also came out with a pretty good set of commentary, and they are also a big play on the entire CV cycle. So I think one needs to be choosy in auto. It's not a blanket buy across segments and pockets.
Mm. IT didn't do well this week. It is IT index is down nearly 3%. Which are the stocks that one should pick up on DEX?
So when you see a lot of risk appetite coming into markets, typically the defensives take a knock, and which is what has happened in this particular week, and which is why IT, pharma, FMCG all have been down. And my sense is that if this softness continues for next week, then IT, pharma, and FMCG will do well. And relatively, say within IT, we have seen Infosys doing well in terms of order wins. And once this sort of start executing this, our sense is that the growth rate will be slightly better than TCS. And there's still a decent amount of valuation gap between Infosys and TCS. So I think Infosys within that looks good. Otherwise, overall IT as a pack structurally looks quite positive.
Mhm. Any of the FMCG stock that you're eyeing?
So in FMCG, so Marico looks good given the fact that we haven't seen much of a price performance in the last 2 or 3 years. So stock has been sort of hanging around in the range of 350 to 450 kind of a range. But I think food as a category is something what they are sort of pushing their pedal. So that is one stock which we like, and relatively attractively valued also. Besides that, Zydus Wellness is something which delivered about 16-17% kind of a growth rate last year, driven by sugar-free products, Glucon-D, and other products. Then I think we also like some of the other what I call food-based companies, something like Tata Consumer, which looks structurally far more better in terms of growth because now the domestic pie is contributing more compared to the previous case. So I think these are the kind of names what we like in the entire FMCG as a pack. Besides that, Dabur also looks attractive. I think they are one of the most aggressive ones in terms of product launches. So that way they are also sort of looking quite good.
Paper stocks have seen a bit of traction during last few weeks that we have seen. I mean, they have gained around 30 to 40%. Would you be interested in picking up any of these paper stocks?
So in paper, typically, if you look at historically, paper as a segment has been sort of not really growing much. So it's 6-7% kind of a growth is hardly a growth which excites market, including us. So that is why structurally we don't have too many stocks under coverage. But I think Uatamaki is something which we are liking at this point in time. Paper prices have gone up, so that is what is also sort of resonating well with some of the stocks. But structurally, we would expect that some of these companies will do well. But I think our topic there is again Huatamaki. So that way, I think that is the only stock which we like.
Your view on Larsen and Toubro? I mean, would you hold at these levels and keep it for some more time?
Actually, you should keep it for a bit more longer period of time because see in L&T, half of the value is now driven by IT companies. So that way, the outlook for both for their entire portfolio of IT companies is quite bright. On the infra side, we have seen their order book sort of ballooning by nearly 76% in this particular quarter. And in L&T is one of the biggest beneficiaries of this entire capex. Typically, they have got a market share of about 16-17% of the overall ordering and tendering. So that way, I think they are structurally poised to do very well. So I think, given the price performance, I think you would expect the stock to sort of do a lot more better. It hasn't really performed compared to our expectation, but definitely a stock to sort of buy even at current levels, and to be held for at least 1 or 2 years till the time I think this capex cycle sort of plays out, or at least one has to watch out for this capex to sort of really come by. So I think so it's a good play from that perspective.
Anything you like in cement space, mid cap cement space particularly?
So I already mentioned JK Cement as a player, which looks quite good. We have a target price of over 2,950 on that stock. They've been quite aggressive in terms of capacity expansion. Beside that, Sagar Cement is what we like. It's a south-based player. They've been doing very well. They've been sort of looking to expand their capacity quite aggressively. So cement, the entire pack quite looks good except for the east players. So that way, I think JK Cement and Sagar Cement look good. But you have other players like JK Lakshmana, which are also decent. But I think these are the most aggressive ones in terms of capacity expansion. So when your capex cycle is about to turn, what is required is that you need to be very aggressive on the capacity expansion side. Otherwise, you will only benefit from the prices, not from the volume growth.
Mhm. Any new small cap shares that you have identified this week?
So between small cap and mid cap, what we like is something like Lotus Lab. So we haven't seen much of a price performance in the last 3 to 6 months. And CRAMS as a portfolio is emerging as a very attractive opportunity across the domain. So we like the entire pack, whether it is Divi's Laboratories, Suvin Pharma, Lotus Lab, because CRAMS plus Syngene. So it looks like a multi-year opportunity is very sort of a stable kind of opportunity. So it's like a sort of IT kind of opportunity plus manufacturing attached to it. So Lotus Lab looks quite attractive from that perspective. Concor, we like largely because it will be a big beneficiary of the Western dedicated freight corridor, which is expected to come in the next few months. Because they've done largely bulk of the capex cycle is over for them. So now it is asset sweating which needs to happen. And we expect a good bidding demand for a company like this, given the niche player it is. And then Trend is another company which we like largely because whatever we have seen on the apparel side, recovery has been relatively slower. But this is one company which is keeping the capex intact. So that way they are quite aggressive. And it's a good play on the value fashion segment, so which is where Zudio as their segment doing very well. While it has an impact on gross margin, but it does not impact their ROS. So that way, that looks attractive. I think mid-time small cap, these companies look quite attractive.
In the frontline space, if you talk about pharma, Dr. Reddy's has given up some gains. It's down 4.5% during the week. Time to accumulate.
So in pharma, see the best model, like I said, is more of a CRAMS opportunity, which is where DVs is sort of a gold template. Besides that, you have US exporters which have been doing well. So the likes of Dr. Reddy can be accumulated, is looking good. Sun Pharma is also what we are liking, given that their complex portfolio has been sort of shaping up well. So that way, that also remains a good pick. So I think the entire in pharma, I think you have very few names which are not likely to sort of do well. Otherwise, most of them are sort of shaping up well. But structurally, we are more positive on CRAMS as a segment.
Next week, we have an expiry week. So what should one do, and what should one keep in mind? The participant who has already invested his money in the market.
So actually, if you look at this week, you had a weekly expiry, and we had witnessed one of the highest volumes on the FNO side. So I'll not be surprised if we sort of keep witnessing those kind of higher volumes. But it is largely to do with the fact that we are seeing decent amount of money-making opportunities on the banking side, because banking is one segment which has been sort of been buzzing post. So some bit of a volatility we would expect. But like I said, I think broadly Nifty range would be somewhere about 15,300 to 14,600 kind of a range. And I think if we see softness for the early part of the week, I think defensives might do well, because we have already seen decent amount of price cuts in some of these names. So I think IT, pharma, FMCG relatively should outperform compared to the rest of the pack.
So this is time to end this week's market wrap. Thank you, Pankaj, very much for being with us.
Thank you so much.
Have a nice weekend and be safe.
Same to you.
That's it in the market wrap for now. Till we meet next week. Bye bye and stay safe.
Yep. Thank you.
Thank you, sir.